Hello, everyone. Welcome to this week's weekly market view for Monday, the 27th of October, 2025 to Friday, the 31st of October, 2025. My name is Vishal. Let's get started. All right, so let's kickstart with the Nifty analysis. As you can clearly see here, we have the weekly chart, and last week the price did come into this pro gap and gave us a nice reaction. In fact, it created a more of a bearish candle. Now, this week has opened positive, so we have another gap up opening. Looks like the market is taking support at 25,900 levels, and it'll be interesting to see if the prices eventually break this all-time high and move to the upper level, which is 26,500. More or less, these are the open interest levels, and this will probably tell us where the market direction is heading towards. If you go on to the daily chart now, although we have reacted from the weekly chart, we still haven't yet filled this gap over here, this rally based drop, and this remains the last threshold for the Nifty in case if the Nifty has to hold. So 26,160 to 26,305. This is going to be the last threshold supply zone for the Nifty. And we can clearly see over here that 25,900 is acting as a support. We do have this gap up opening over here, which is from here right up to this point. So this is going to be a, a crucial area again. In case if the price does come here, it will probably try and push eventually to the upside. So it'll be interesting to see how things pan out for this week. It's going to be interesting to see how this month ends as well. This is going to be the last week of trading for this month. So keep a close watch on these levels. On the demand zone, we have 25,291 to 25,009. These are going to be the key levels of supply and demand for this week. Let's move on to the next index. We have Bank Nifty. Let's start off first with the weekly chart. So on the weekly, the Bank Nifty is more or less making an all-time high. And the open interest levels on Bank Nifty are clearly suggesting that 58,000 will act as an immediate support, and 59,000 will act as an immediate resistance for this market. So for this week, we might expect to see the Bank Nifty being a little range bound, more on the lower side, 58,000 levels, to the higher side, 59,000. If we break this chart down on the daily chart, so on the daily, we do have an interesting level here, although we cannot call this as a supply zone, but it could be referred to as a picture of supply. So we are right now sitting in this picture of supply. And very interestingly, we are also sitting at this 58,000 highest open interest level on the put side. So there's going to be some kind of a battle between the bulls and the bears here. The key levels of demand on Bank Nifty are much lower, 56,805 to 56,220, and then 56,240 to 55,708. So these are going to be the key levels to watch out for on Bank Nifty with respect to supply and demand. Next, we are going to be looking at the mid cap index. So there was a request from one of the participants that he wanted to also view the mid cap index. So this is the weekly chart of mid cap. And very interestingly, we have a new level of demand on the mid cap, which is this rally based rally. And the reason why I have marked this level is because today we have had a gap up opening on the mid cap. So this becomes more of a rally based rally. And as you can see, 13,200 is going to be a strong support for this market, as well as 1340 is going to be acting as a strong resistance. This resistance, which is 13,400, is lining up nicely with this weekly rally based drop supply zone. So we may expect the price to move towards 13,400, and then we might see some profit booking coming onto the mid cap stocks. Let's look at the Nifty Financial Services now. On the Nifty Financial Services, if we look at the weekly chart, pretty much, again, it's behaving pretty much like the Bank Nifty. And what is interesting to see is that we are also seeing a potential demand getting formed over here. So whether this is more like a rally-based rally pattern, or this is going to be more like a rally-based drop pattern, only time will tell. But looking at how this is, forming at this stage, seems like there is going to be a new level of demand, and we might see the Nifty Financial Services sector moving much higher from the current levels and making probably new all-time highs. For this week, we expect the Nifty Financial Services to be trading in a tight range, which is close to 100-point range. But again, this will eventually change once the prices do break out of this range. On the daily chart, on the Nifty Financial Services Index, we do have this gap level between these two candles here. And the strongest level of demand that we see on this chart is at 26,885 to 26,546 for Nifty Financial Services. This is a key level of demand. So let's wait and watch whether if price does come to this level or price tries to fill this gap, then do we get another reaction to the upside? Let's now look at the inverse correlation, which is the USD INR. And here we can clearly see from last week, the level of demand on USD INR is holding nicely. So nothing much has changed on the USD INR. Demand is intact. Supply is also intact. Demand zone is from 87.72 to 87.51 and supply is from 88.68 to 88.93. We do see that the open interest level on USD INR is slightly staggered up above this level of supply. So there is a possibility that in case if the strength comes into the USD INR, that could put a little bit of pressure on the Nifty. Also, that Nifty is slowly and steadily approaching and coming into a very, very crucial level of daily supply as well. Let's look at the India VIX, which is another inverse correlated market. And here we can see from last week, we see that the India VIX is slowly and steadily rising to the upside. And this also tends to give us a little bit of a clue that in case of volatility is increasing, Nifty is coming into supply, USD INR is also pushing to the upside. Probably we need to be a little cautious at this point in time. All right. So this is going to be now after this daily candle closes, this is going to be a new level of demand on the India VIX, which is going to be potentially this base rally, 11.73 to 10.70. And now we are trading deep inside this level of supply from 12.9 to 13.17. The next level of supply on the India VIX is 13.63 to 14.55. So in case if this supply zone breaks, the next stop on the India VIX would be this 13.63 to 14.55 odd level. Let's now switch gears and move on to the commodity market. So last week we did see a sell-off in the gold and silver commodity assets. Right now, gold is still trading in this level of demand. We do see a support at 1,20,000 open interest level, put support, and we also see the call open interest at 1,30,000. So seems like market may tend to remain a little bit range bound to sideways. Maybe with a slight bullish bias taking into consideration this level of demand. But in case if the market does break this 1,20,000 odd level, then prices are more or less likely to fill this lower gap and then probably continue to move to the upside. So gold is definitely at a very, very crucial level. So let us keep a close watch on gold to see how gold shapes up this week. Let's move on to silver now. And on silver, we had this weekly level of demand. So this weekly level of demand is still holding. We have another beautiful level of demand at the bottom here, also lining up very, very nicely with this 1,30,000 highest open interest level. We do see resistance very, very high as of now. So it seems like the market is expecting still more bullishness than bearishness on the metals over here. But it's going to be interesting to see how this level plays out. As if you go onto the daily chart, we did have a violation of this upper level over here, but seems like price is taking a little bit of help of this lower level, which is also coinciding with the weekly level. So if in case if the weekly level of demand holds, then we might see another uptick in silver. The first stop on silver will be this drop-based drop level. And then the second stop will most likely be this rally-based drop level from where the prices have actually fallen to the downside. So again, in case if the market fails to hold this 1,39,781 level, then we might see the markets coming all the way down towards these levels, which is again the next best weekly level of demand coinciding with the 1,30,000 odd level on silver. Let's look at copper. So here we have copper now. Let's go to the weekly chart first. So copper is making an all-time high. It does have this strong resistance at 1020, which is the highest open interest. But we also see a very nice level on copper on the weekly chart from 920 to 892. Levels are still far away. We are still within this very very ugly looking daily supply zone from 1027 to 999, and within that we have this 1020 level highest open interest. So it'll be interesting to see whether copper holds onto this level or probably completely reverses from here and makes a new all-time high on the index. And if you look at the demand zone here, 940 to 928, this is going to be a very very key level on copper. Let's move on to the last commodity, which is crude oil. So crude oil did have a very, very good run on the bullish side last week. We saw a nice uptick in crude oil from the weekly charts. Now we are creating these so-called bullish engulfing candles. So we had a first reaction from this level over here, which was more or less a tested level of demand. And now we have this bullish engulfing where we have this bullish engulfing here, and seems like crude oil wants to move to the upside. So again, a lot of things lining up. India VIX rising, USD INR rising, crude oil prices rising. This is giving us probably some hint that maybe the market participants are not aware of what is going to happen in the near term. So there is going to be a little bit of uncertainty based on what we are seeing on the chart. If you look at the closest levels of demand and supply on crude, so we have 5763 to 5912, the closest level of supply. And on the demand, we have two new levels of demand here, 5073 to 4953. And then we have this 4885 to 4726, which are going to be the crucial levels. The open interest for crude is 5500, 5400 right now. So 100 point difference, but seems like once this 5500 level breaks, price will have no hesitation in moving to the upside towards 5763 to 5912. So keep a close watch on these key levels on the indices as well as the commodity markets. All right, so that's it from me for this week. I hope you enjoyed the analysis. And if you do like our analysis, hit the like button, hit the subscription button, and do give your valuable comments in the comment section so that we can address your queries in the next video. Have a lovely trading week, everyone. See you all next week. Bye-bye.
This should not be treated as a recommendation. Please conduct your own analysis or consult a financial advisor before investing.